Okay, let me know if you guys can hear me and see the chart. We'll get into this. Testing 1, 2. Okay. So what I'm going to do here is first just kind of go through today's action. Just kind of look here just because I still have on my fancy lipstick on the chart here. Just kind of scrub back for my own review as well. I haven't looked at everything really in depth for today. And then we'll go through some top-down stuff. We'll look at maybe 5, 15, anything that's of note today on the higher time frames. And then we'll do like a complete top-down analysis of where we are ahead of NFP. Of course, we'll probably make a whole plan, and then NFP will just screw it up. But yeah, let's get into it. Kind of just a chill sesh. You'll probably stay on maybe till like 7 or so. We'll see where this goes, but the lady will start yelling at me, so we'll see how this goes. So let me just kind of scrub back. If I'm not talking again, this is for my own review here, so let's just see what we get. And let's have some fun. First and foremost, we just have been seeing time and time again the strength of the new day opening gap as a draw on liquidity, and of course as like support like this in certain scenarios with how we utilize it as traders. Yes, this will be recorded, Mo. So like obviously we want to see support, resistance, rejection, us overcome it if we're in a long down here, for example. We know really how to engage with it, and we'll see if there's any scenarios like this today. But recently, not just today, we're seeing the significance of the new day opening gap. Okay. Now, recently as well, I mentioned for a specific model, I'm going to try to do some, that's what I was going to do tonight, but FX Replay won't let me log in. The midnight fair value gap, we'll go back and kind of look at it. Maybe if we have some time, we can go back at some other days and maybe yesterday, the day before, etc., and see if it was a factor in how we can utilize it or if it wasn't for the sessions this week. Okay. More particularly during we see it during New York, but during London as well. It's just another thing to add to the list, not to overwhelm. I'm using it the same exact way as I do with the 930 fair value gap, right? An area, a significant inefficiency that we could reject off during a macro. So just, real quick, if this is our macro window, let's say this is let's pick one, 1050 macro, and this would literally be a model. I'm going to back test things like this. Let's say we have the midnight fair value gap. So again, if you guys join later, you guys want to, you guys didn't hear about this yet. It's just the first fair value gap after 12 a.m. Eastern time, which of course is midnight, thus the genius name, midnight fair value gap. But essentially like these are the type of scenarios I'm going to be looking at where, let's say this is like a London high. We know how to use it as a roadblock as well. I've discussed that in lessons and reviews, etc. So we'll see those types of scenarios, but I'm going to more so back test this as an area where we could reject and again, just plug in whatever macro that profile fits for these scenarios. I'm sure we'll probably see this soon. Maybe we saw it today, maybe we didn't, but let's say like we build engineered sell side, and right below it, it's like an ideal situation just for a clear draw on liquidity. It's good just for bias in general. Not even including the midnight fair value gap there. But if we have like this here, and obviously for a setup, if we're short, if we're looking for a bearish delivery, we want to see some form of manipulation above market price. So we'd want to see liquidity sweep during a macro into this midnight fair value gap, and then like some sort of inversion go lower, right? So these are the type of things I'll be back testing. You guys are welcome to do this as well. And yeah, it's the same way I'll use the 930 fair value gap. And even we see it here, right? We see, if I recall from this morning, we worked it a couple times, just how we're accumulating in this. And, this isn't to depict, okay, you have to buy here. You have to buy here. You should short it as soon as we get below. No, that's not sustainable. It's not consistent. I don't want to use it that way, just like every other ICT concept. But this is initially just right off the bat, just to show its importance, right? How we're kind of holding on for dear life here. And then right when we close below, we dump down here. Okay. 930 fair value gap there. So just kind of a note on that because it was on the chart on my mind. And often, again, we'll see this, and what I've noticed thus far, obviously you guys know midnight opening price can be a strong draw on liquidity. So you have another session high above that if we're down here somewhere. Couple that with the midnight fair value gap and new day opening gap. The bias for a particular session becomes clear. I know I'm doing a lot of talking here for hypothetical scenarios, but we've seen time and time again the new day opening gap be a factor. So I'm going to actually delete this here. And really, when we have day before NFP, so it's kind of difficult. You don't have to trade on these days, but see how we're just kind of up, down aggressively, up, chop around, up, down, up, etc. Right? So if you struggle today, don't beat yourself up. The setup, this is here. So first we'll start back here. I joined Matt's stream. Matt's not here right now. I joined Matt's stream a little late, literally right around here, right before we expanded higher here. And this is what I wanted to do. I think I posted this on my Twitter, but we'll discuss it and kind of break it down here, where this is an ideal setup, right? What occurred here, we'll go into replay so we can kind of break this up. And we had the overnight high somewhere up here. That's obviously a factor for your number one priority, my number one priority, draw on liquidity. So let's get that here. This high. Now I call this Asia high, but technically it isn't because Asia I look at 7 to midnight and that's formed after. Just let me get this here. I'll just call it overnight high. Right, so we have buy side liquidity up there. And then like what are the footprints that lead us to bullish order flow? So now, first and foremost, if I recall correctly, again, if mistake me if I'm wrong, but I believe this was an SMT initially, and then just staying fluid with price, this became an SMT. Right now, SMT is a significant crack in correlation, significant signature that can give us a very strong clue on what is occurring, when it's occurring after the SMT. But two things here. You guys know I love my macros, and that's exactly when this is occurring. Okay. Right there. Right. Where is that occurring relative to our key opening price? Below midnight open. A refinement of that, how we trade here. Macro opening price. Where else are we dipping below? 930 opening price. So what are we doing here? We're using our tools that we use on a day-to-day basis to build a narrative and identify a turning point. Now, on top of this, what is this here? Right? It's a new day opening gap. These orange lines here. So I'll make this a bit thicker so you guys can see. I often forget that Discord, I believe, makes the screen smaller even if you full screen it. Actually, no, it's pretty good. All right, regardless, kind of a moot point. Right, so again here, like I got this question today. I can't recall, my memory's going, if someone DM'd me or responded to a tweet of mine. But regardless, we'll talk about it here because, you know, I can point out all day good setups, why I trade is good, why a setup is good, why you should expect a turning point here. But like, when would I not take a setup, right? So like here, this is above macro opening price. We're running high. This could have been an SMT as well. I might as well just check and saying instead of saying coulda. Let's look. I believe I remember it was. Let's see. This was 950 macro. Or maybe it was like a funky SMT. 946 to 953. Yeah, so 946 right here. And this is the S&P to 953. Still kind of a strange one, but actually, no, it's not that strange. What am I saying? So we have that cracking correlation there. Now, that is fine for a turning point, but the takeaway here is I don't like to short if we're that close to an overnight high, session high, London high, previous day high, when especially at the time, This SMT hadn't formed. We had this cracking correlation down here. So against that bearish setup, we did have a discount or bullish SMT, whatever you want to call it. Price had already expanded above new day opening gap high. And my priority, what I always harp on to you guys about, we were that close to a potential draw on liquidity after bullish signatures down here, right, in a strong open. So you can, right, if you are feeling comfortable executing on these setups, right, it's fine. A, just manage risk, but B, the most important takeaway from this is that, like, if you go short here, because this is we're focusing on this little short setup here, SMT above macro open, not the cleanest equal lows down here, but new day opening gap, like whatever. It's okay to take these, but you need to make sure you're taking partials, especially when, let's say you were targeting opening range low right here. When you have a potential bullish scenario here, right? We could reverse at the new day opening gap. This also, I'm not putting on the chart because it's already a million things here. This expansion here, this is the first fair value gap after 930. So this is the 930 fair value gap, a significant place coupled with a new day opening gap that we could bounce. Right? So especially like at what point, like if you take a partial at the new day opening gap high, that would be smart, or you could just take it all off, right? Because you're trading against counter trend and potential bullish order flow. Again, the SMT that I deleted. But you understand, again, the significance of the new day opening gap, 930, and price dipping back down and sweeping below 930 opening price, right? So at this time, more specifically, where I put that eye on this candle's close, like why is that significant, right? Because we saw price come down, sweep lows below macro opening price, right? Which is the what? The bullish checklist. In a new day opening gap, we see the bodies respect that and start to wick away, and we have an SMT here. So an SMT below all these key opening prices during a macro in a significant inefficiency here in the 930 fair value gap. This is a great setup here. Okay, so, if you're looking for a continuation lower here, again, I mentioned you should take partials or at least move to even. But like here, if we close above, you can kill it. Or if you hadn't trailed, stop at that point. It should be trailed to even, because you're seeing after we return to a significant area in price, bearish order flow start to break down, because we understand plain and simple that the bodies tell the story. Okay. And then here, this is what we're watching as well. This close above, this was a great example, if you guys are in chat this morning, of what we saw the midnight fair value gap as a macro roadblock. So we have the BPR, buy side delivery, sell side delivery. We reclaim that, but why is that even higher confluence to support price? Because we have the midnight fair value gap. If I differentiate these colors real quick, that purple box along the top of it, right? So there's already been a lot of delivery here. We already had a lot of delivery with the midnight fair value gap. So what do we want to see? It's spooled to this high, to the overnight high. We want to see this here stay open as a breakaway gap, right? So at this time, if you're on the opposing side, trade management is so important. If you're long here, after we close above, you should move to even. I would move to even. Right. And then we see beautiful expansion here to the overnight high. Okay. So I want to discuss that. And if I do remember correctly, there was a great setup. Was it 1150? Let's see. This is going to bug me. I don't like having these dark colors on the chart here. Same thing, even it's kind of tomatoes here. If I drag the BPR across the screen, we'll put our focus on the midnight fair value gap, but just the takeaway is a significant level in price here. Now let me try to find this. Okay, I think it was here. This was a really nice setup. I can't recall if this was an SMT, but regardless, it was a good setup. Let's check. 1145. Where are we? S&P built equal lows here. So objectively, I don't like when it does that on ES. So that's already something I don't like about this long setup. On even if I'm trading NASDAQ, I don't want to see, if I had to paint the perfect setup for a long scenario, would I say, oh yeah, and then I would really like to see S&P make 3 equal lows to the tick? No, I wouldn't. Right? Obviously, sometimes they'll occur and they'll leave the engineered sell side for later, like they did today. But often I see that S&P will go down one more, right? By extension, maybe NASDAQ will have one more stop hunt, right? So it's kind of a note on that. Objectively, we'll still break down this setup relative again to what I want to focus on here with the new day opening gap. So a couple things as well. We're seeing stop on here. Okay. We are in the 1150 macro window right here. So a whole bunch of chunky price action. I'm going to drag this out over here. And then here, this high, and I'm going to talk about this high. I mean, it's kind of already on the chart there from the key takeaways from today. All right. 1150 macro window. We do have a template right there beautifully. So we're in the time zone that we want to operate in. We want to see a specific type of delivery for a macro window. What I'm seeing here beautifully again, I'll take this in a sec, but don't let me forget this. These things, this particular scenario, I'll get into this after I paint the main framework for this. 10x is your ability to read order flow in the 1 minute, right? Once you start thinking, and I'm sure a lot of you guys who've been here for a while, familiar faces in here, kind of know what I'm about to say with this in terms of gauging order flow, understanding if we're in a state of sell side delivery, buy side delivery, what objectives should be met, etc. So I'll get into that in a sec. But once you start to understand the main framework, as I'll discuss, it kind of changes the game. It changed the game for me where it starts to click in my mind. First and foremost, like I mentioned, you guys know for a macro power 3 setup, we want to see price manipulate below there for a long scenario, run an old low, right? So again, this would have been nice if this was a cleaner SMT, if ES objectively did not leave those equal lows, right? If I'm being completely honest, I don't want to see it do that, right? But what occurred here on NASDAQ is still good for takeaways because often we'll see ES clean up its lows and it makes the setup even better. So, these things we see to some degree occur on a day-to-day basis with the tools that we use. So anything we can take away is beneficial for our review process. So again, here, reading order flow, understanding if price is in a state of, I'll call it, if this is manipulation or a real move lower, breaking down to go to this low beyond whatever the, for today, whatever this is. Let's see what this is. Pre-market sell side, whatever or even these relative equal lows right here, right? Whatever the session is, the next sell side objective, right? Now, how do we determine that using what price and the candles closures are telling us here, right? So the main framework around macro power of 3, it's not just good for, okay, we want to see it go below macro open, run a low, just itching to get any sort of entry. But the framework, again, the mental framework around it is so powerful where, when we run down, starting here at 1157 where my cursor is, and I think I saw that guy Sir Pickle, I feel weird calling him that, but he posted it on Twitter today where there's here it is, demonstration. So I think I do something like this. So you guys can see my thing more. So let's see how I use this. I think I hold Option. Yeah, so if I let go, Oh, it just fades away. That's wicked cool. Okay, so you guys should be able to see some of these things easier. So here, again, when we start to move down right here, is this a real move lower, or is it just going to stop at longs and reverse? What are the key tools in this particular scenario here, right? This SIBI that I've drawn across and the new day opening gap, right? Because if we have a significant inefficiency, again, plug in, this is the new day opening gap today. Plug in a 930 fair value gap here. Plug in a new week opening gap here. I'll do some more back testing, but plug in the midnight fair value gap here, right? These significant inefficiencies coupled with these 1 minute inefficiencies here, like this 1 minute SIBI right at 12 p.m. today. If we were going to go lower for clean sell side delivery after we close below the new day opening gap right here, I'd want to see this SIBI remain open as a breakaway gap. I would classify this SIBI, this red box, as a high probability bearish SIBI because it's at the bottom of that new day opening gap. So again, tomatoes, you're stacking confluence here. The new day opening gap should push price lower, and the SIBI that's right here, and we'd want to see a breakaway gap as a signature of weakness. But what occurs right after we run a low, again, this is why it's so beneficial to understand macro manipulation relative to macro opening price. Right after we run a low below macro open, we close right here, right? So this is problematic for the short continuation. And if you're looking for a long in the scenario, exactly what you want to see. We're running a low, shorts are trapped down here, and the body here is telling you that we're reclaiming the new day opening gap, a bullish algorithmic signature, and this SIBI failing was bearish order flow breaking down. Okay. SIBI, BISI here, pick your poise really. You can enter at the high of this BISI, the new day opening gap. You can wait for this. I wouldn't, in this scenario, I wouldn't wait for this. My stop would allow here. So this scenario, it didn't return there. But often I'll see price do this, come down to the high of this BISI or just wick the new day opening gap and run similar to what it did here. That's what I would want to see it here. So, I'm allowing for this retracement if we want to spend a little time in here and print some candles, but I want to see the bodies respect it and expand, right? And if we're correct, and even look to this is a really nice setup, look to the left side of the curve where, let's say we enter right here when we return to the BISI. To the left, there's just highs, a bunch of highs. There's not an inefficiency till right here, right? But again, with the drawn liquidity, we have the midnight fair value gap coupled with swing high, trendline liquidity, and macro power 3 turning points, right? Using the tools that we use, significant inefficiency relative to macro opening price. Okay. Now, again, objectively, I kind of want to get rid of this thing now. Kind of frustrating me. How do I take this thing off? Oh, that's what I do. Okay. So I bring this down here. Cool. All right, now we're talking. Here, right, we have this SIBI I mentioned. That's the only thing in the way here. So if we're targeting the midnight fair value gap, by extension, again, coupled with midnight open, this high here, what I would be doing from a simplistic manner, it's going to look messy for a sec, just bear with me. I want to see if I'm in a long, if I have a bullish bias, a long position, I want to see premium objectives be attacked, right? So that's anything above here, right? So, this is, and now I see this little SIBI here, okay? And that's actually important for me right now. If I drag this across. So see this high formed at, let's bring back my new fancy tool that makes me feel cool. Damn, that rhymed. This high here at 1137, that's exactly the low of this inefficiency, this small SIBI. When I see that, that's a strong draw on liquidity again, of course, if it's in a premium when I'm in a long. for this dealing range, right? So, this is what, if you want to call it, the implied dealing range where I think price is going, right? And if you were to say, well, what's the difference between implied and not implied? If I was like gauging discount and premium just relative to the price action that's occurring, right? This has occurred before where I'm framing my narrative, my bias. This has occurred after. So like, man, it's so interesting to see this. I didn't even see this till now, right? Like, so I can look for signatures like this. The bodies tell a story. You see how it's respecting 50% of that? So I'm using multiple tools here, right, to look for these types of signatures in scenarios like this where, if I have the implied dealing range on, drag it out, we're closing below it. So again, it's not a huge deal, but like you're looking for all the types of bullish signatures that you can see here. And relative to the trade management I was discussing, again, like this is a great place to take a partial, right? Or if you're struggling with holding trades, you take it all off there, then you stay with the trade and ask yourself, okay, what would I do now if I had a position on, right? You're paying yourself as the market's making it available to you. And you're saying, what would I do here? Okay, so again, being objective about this, at this close, running this high, I would trail my stop at this moment right here. So let me actually do this right here. A partial would be taken here. And again, even if you want to be more conservative, this is fine for a partial, right? But a partial would be taken here at 91.75, the SIBI. We closed above it. That's when I would move my stop to break even. So if the initial stop was, since we have such large expansion here, I put it like a little down here towards the bottom of the order block. Again, what we're kind of going through now with trade management, especially for some of you guys who have been here for a while, is arguably more important, at least at this stage in your journey, your progression. Every trade scenario setup is slightly unique to each other, but I'm trying to say, okay, close above this, trail to even, close above this, trail tighter, etc. Take a partial here, right? Things that we can control. But if the original stop loss is down here and then right at this candle's close, then I would move to even here, right? And then after we close above this SIBI and we're so close, we're tagging midnight open, we're so close to midnight open, you're in pretty good profit here. If your entry is somewhere down here, we'll call it 70 to 805, 810, 35, 40 points there. So you guys take that all day. I take that all day, right? That's a great move, especially with this type of delivery here. 5-10 minutes, you're ripping in profit. But at this point, on now adjusting it, this candle's close, I'd want to see these two remain open, obviously, and I would be dragging it right here below this inversion, and I would be stopped right there. Okay, now in hindsight, you could say, well, if you just left it, it would have went to target. Yeah, but sometimes it'll just dump back down, especially on the day before NFP. You have to be a bit more tighter with the way you manage trades when the market's allowing, if you have a great position and a great entry, when the stock market's being allowed to move around, right? You need to objectively pay yourself, right? At this moment, it looks like price is just going to rip up there and keep going a million handles, right? But you have to do your best. And again, it's harder to do. It's easier said than done. But I'm just looking for premium objectives, SIBIs typically, and saying once we close above this, I'm trailing to even. Once we close above the next one and I'm more in profit, now I need to start paying myself at a logical level. Not just, I'm scared right here, I'm going to trail it right here. No. This is from this candle's close, 06 to 90, 15, 16 points, whatever. Actually 14 points, whatever. I'm fine with just taking that there, right? And I literally have no emotion majority of the time, and it will just go there, right? But you just do the right thing over and over again, manage the position, prioritize risk with logic after closures above candles. Okay. Now, even just here again, what do we see? Beautiful wick into the new day opening gap. Virtually, this is a funny thing. Pretty much the identical setup. The 1-2 punch that was occurring here. New day opening gap, closure above. new day opening gap, closure above, right? So that's your 1-2 punch really with, I should say 1-2-3 punch, where number one, you have a clear draw on liquidity or no trade, right? Say that 10 times out loud every day before you trade. Number two, manipulation. And number three, reversal signatures. What happened? I was like, what? So here, number one, session, I'll do this, LQ, that stands for liquidity. Key opening prices, key inefficiencies. So again, new day opening gap, new week opening gap, 9:30 fair value gap. Number two, manipulation. So stop run. Now this is important, like the 1-2 punch. Key inefficiency. And opposing order flow breaking down. And I guess I kind of just, that's actually part 3. Right, stop run into a key inefficiency, best case, again, SMT makes it A+. And then you want to see whatever is opposed to your bias. You want to see that order flow start to break down. So again, just to reiterate, what does that mean? And again, I keep saying again, dude. I need to get some better vocabulary. Screenshot this. I'll just do this. Oh, I didn't catch it in time. Pain. And manipulation as an additional signature, you guys know we want to see if we're bullish occur below key opening prices, if we are bearish above key opening prices. Okay. And I should say this. I should have done this. During macro. All right. So I think that's all I want to talk about for this fractal, for this move. Let me just dig in. And again, if I start, for anyone new here, or just to reiterate for you guys, you familiar faces, the RTO gang, I never mean to ramble on. Half of it is my ADD and just my pure fascination of price in the market. This is literally my life, my passion, my career. I had a meeting with some, I can't really say much right now. You guys will see down the road, but I will represent RTO as well as I can. If you guys are catching my drift with some very important people today. So some things are happening, and it's just from my my fascination of the market. So if I'm ever rambling about this stuff, just because, again, I love it, and certain little signatures, they make sense to me, and this is just what's occurring in my brain in review and during live price action. Of course, I'm not always going to catch a million of these signatures, but from where I started when I learned ICT to where I am now, like down here, I see what's occurring. I see the turning point, right? I see that, and I understand that when we test this SIBI with a new day opening gap, if we are bearish, we should go lower. So by extension, flip it. If we close above, we have pretty decent reason to expect higher prices as a draw on liquidity up here. We can get involved here during a macro. So it just comes with experience. And again, I am the furthest person from perfect. But if I'm ever like rambling on, it's just because I could say something that clicks in my brain, that clicks in someone else's, that could be the one thing that one person is missing, right? And hopefully at some point, whether it's on the 1 minute, 5 minute, friggin' 15-second, God forbid I don't do that, it can help someone, even if it's not like the specific thing, but like a framework of thinking relative to price delivery and gauging order flow with these little signatures. Some people who just join and see this right away or just start ICT are going to say, dude, this is way too complicated. It doesn't make any sense. But you just need to give it time and experience, right? And again, just understand that one little thing could completely change the way that you think about something and open a whole new door for you. Oh, and this is what I wanted to talk about as well. I almost forgot this. So with order flow for this particular scenario, this stuff is so interesting, dude. Like right here on this retracement, stacking confluence, we see this BISI right here. Sounds good, Volk. Glad to have you on the team. Literally just joined. No problem. Trades for fun. Glad. What's up, Matt? Baby duty. How's baby duty? But before I forget this, just because I do want to mention it, gauging order flow, this fair value gap here at 10, and it's a volume imbalance here at 11.51, excuse me. This one right here, and again, for anyone new, there's a volume imbalance right here in this 1, 2, 3 fair value gap candle formation, so I'll include that there. There's not one at the high, so this is my anchoring for this. So how can we use this inefficiencies and when we're in scenarios like this to read order flow? How do I use this, right? Does this mean what I'm about to describe, you have to sell, then buy, then sell? No, you don't. You don't have to. Sometimes I will, right? If it's the only thing I can key off of to gauge order flow and I'm really trying to get involved after the manipulation, right? But like here, gauging order flow. Okay, let me drag this down because we're gonna do this. I'm gonna delete this. Going to delete this. Gonna bring our buddy back over here. So, bullish fair value gap, BISI, right? Formed. That's his first, how it was created, if you will, first function, whatever you want to call it. Above macro opening price. High here, relative equal high here. They run that. And then we close below it, right? Macro bearish inversion. So again, if we are at this point, this is what I want you to focus on. Because the bodies tell a story. The classification of this, it's not just to put a bunch of different labels on stuff. It's to gauge order flow. Right? That's the tool. So if we are bearish, what should we do here? We should go attack a low. And we have the new day opening gap right in between. So how do we want to see it deliver? Quick. We don't want to see it just stop here and close back above it. Then we're just going to go to the highs there. Or it's going to be consolidation macro. Okay? Especially ahead of the day before NFP. But here, it was utilized, and this is when ICT says we cut through candles. It was utilized to complete some sort of sell side objective, discount objective, whatever you want to call it, attacking this low, returning to more of a discount. Right now, we already discussed here. This is just adding to the confluence, but right here, right, we see it come up, and it's still the body's respecting it, right here. Okay, so even this still stays on the chart as an additional signature to gauge order flow and even manage a trade if you really want to be conservative with this. I personally wouldn't do this in case I got wicked out, but this is fine. And in other scenarios, I will use PD arrays like this. This is going to turn to a reclaimed BISI, right here. So it was initially used to send us lower as a bearish inversion. We close back above it, reclaiming this bullish fair value gap. Okay, so on this candle's close, this should support price if we come back down into it. And what do I often say? What kind of delivery should we get relative to reclaimed BISIs if we're going to see efficient delivery? What kind of delivery do we want to see? On top of the fact we have a bunch of just trend line liquidity here. We want to see quick delivery because it's already it was already created with buy side delivery. We had sell side delivery passing through it and we used it to go lower, spent some time here. So once we close back above it, this is when we can get a pop, right? And we want to see it just run with speed. So at this moment, again, you can use this as a roadblock. I'll stick with the same terminology I often use in the lessons to trail stop. Right now, I mentioned since this is so close to the entry, the top of this BISI, new day opening gap, the inversion here, whichever one you felt more comfortable with. I would let this breathe until this SIBI up here, as I mentioned. I won't spend time on that again because I already spoke about that. But let's say, disregard the candles for a second. Let's say this reclaimed BISI was like right here. Right, so now this is almost a 20-point difference from my entry to the reclaimed BISI. Then I would move to even. And I don't have to wait for it to get all the way up here to ensure that this trade isn't a loss. Now again, with this scenario, this is just a little too close for me where we could still wick down into here and run. So I'm okay with that, right? What I would do in this scenario, this is beneficial as well. So see how my mind's kind of just running here, but it's just because I'm thinking about things to share with you guys. If I mentioned the original stop was somewhere down here, after we close above the reclaimed BISI, I wouldn't move it to even up here and I would allow for that wick. As I mentioned, I'd probably just get involved at the top of this BISI and make sure I'm in and be okay with the risk. But I would trail it to this swing low because if I'm correct in my assumption that price is going to deliver higher here, right? There should be no reason for it to come back down here, right? It's allowed to trade in the BISI. It's allowed still to wick into this whole cluster price. This BISI not marked, the upper portion of the new day opening gap, and then it can still run, right? I don't want to see it do that. I want to see it just spool when we have the reclaimed BISI and not a lot of inefficiencies to overcome here to deliver through, not a lot of speed bumps, right? So by extension, this is, you could call it protected low, a safe place to put a stop loss. And I am okay if price comes down and takes me out there. I've accepted that risk and it's not price delivery that me personally, I want to be a part of, right? Could price come down here, wick below this one more time and keep this original low safe and then reverse? Yeah, it could, but I want to be involved in efficient delivery and I know what type of price signatures I am looking for, right? Not only the great setups, but the type of delivery. Okay. Now on that note, now I'm throwing a bunch of sauce at you guys. If I was to, let's say that happened and it came down here and this was taken out and they did not run this original low down here where the stop was, a little above that, just because if it comes all the way down here, it's probably going to stop me out anyways. So I might as well just save myself some points. If they run it down here and this is formed with an SMT, right? And then we reclaim the new day opening gap in whatever structure for that scenario is in play. Then we reclaim the new day opening gap. Nothing's changed in the first priority, the draw on liquidity. And I'm seeing another reclaim of a significant inefficiency. So I'm saying, okay, that was just a stop hunt. Is it annoying I got stopped out? Yeah, of course. No one wants to take a losing trade. No one wants to get stopped, right? But objectively, they're still reclaiming this, and now we have this SMT. So if I do enter, what do I need to do? Do I double my leverage after a loss? Do I triple my leverage? Am I mad? Do I impose my will? Do I say I'm getting this MFer back? No. I'll enter with less leverage, same scenario, and look for premium key areas and price to be closed above to manage my trade. Right? Is this making sense, guys, or am I speaking gibberish? Again, there's so many little unique nuance differentiations between each fractal and price, each setup, each trading day, but I'm trying to read price the same way. Like that little scenario, that's happened to me before. I remember the exact, you guys probably remember, if I was to find the trade, it's somewhere in the executions, or maybe I recorded it, but it was like one of these scenarios. It literally was the new day opening gap. I'm going to find it after this, where it looked just like this. I think we probably had some more clean highs in here. So honestly, it was a better drawn liquidity, a bunch of relative equal highs. And like something like that happened where I want to say it was a 1250 macro. And this is months ago. So it's crazy. Like when I say I love trading, this is, I remember this stuff, dude. Price did something like this where it like came down and relative to this SIBI here that we discussed. Price did something where right here it reclaimed it, and I went long, and it went real close to there. Came back, stopped me out. I forget if it was even or in profit or something. I'll try to find. I think I recorded it, but I'll try to find it. And then it came down here, did exactly what I just described in that second scenario, reclaimed it, and I just re-entered and just ripped up there. So is that annoying? Yeah. Do I want it to happen? No, I don't want a deep stop hunt. But if this gets reclaimed, the way I'm internalizing that is just saying, okay, this is just a stop hunt, right? The bodies tell the story. There's no need to freak out. As long as I'm not revenge trading or mismanaging risk, it's okay. I can re-enter. So spent a lot of time. How much time do we just spend on this one fractal of price, guys? Right. So if this is overwhelming, I understand just the different scenarios and things that go into reading order flow, the actual setup, reversal, whatever, everything we just discussed. It is a lot, but with time, it starts to click and you start to make more sense of it. You start to see it happen live sooner. You feel, this is, in my opinion, in my own trading as well right now, the most important thing. After an inevitable losing trade or series of losing trades, as long as you're executing the model in the way that me personally, the way that I execute on trades, it makes me feel better about a loss. It makes me understand that there's no reason for me to freak out and chase a random volume imbalance or a random hoopty-doopty-doo elephant thing, whatever the new thing is, or just chase price because I feel like I'm going to miss it. It makes me feel okay, and it's easier to sit with a loss. Does it feel good? No, a loss never feels good. I don't want to take a loss. I don't think anyone does, right? But I've made the mistakes over and over and over again where I've allowed that to put me on tilts. And then after the dust settles of that tilt day or tilt week, or if you have a whole month of just poor trader performance, poor self-discipline, self-management, then it feels like you've never looked at a chart before and you're a shitty trader. When you're not, you just have that recency bias where you haven't been performing well and taking care of yourself, right? And is it a shitty feeling? Yes. Are we mad at ourselves when it happens? Yes, of course, right? But sometimes it's going to happen. Sometimes we're going to break a rule. Sometimes we're going to go on tilt. The degree of which or how much the tilt is, it can vary for everyone. The goal is to reduce that degree of tilt every time it occurs, right? Even if it's just like you try to double leverage to get it back and you take a loss. It doesn't have to blow. You don't have to lose freaking $100,000. But breaking the rules, building bad habits, right? Doesn't feel good, but you need to just accept those things. You can't go back and change them. You look at it objectively and say, okay, yeah, that sucked. I did some silly things. I could have avoided that loss or that series of losses or whatever. I shouldn't have even been trading. Whatever the scenario is that we deem as a mistake, you just acknowledge it. Ask yourself how you can avoid that again. So I know I harp on all the time, but the max trade rule, that's like the go-to example where Oh, I traded 10 times today. I had 3 winning trades in the morning, and then I just went on tilt and revenge traded. Well, if you just were a man or woman of your word and you respected your max trade rule, again, whether it's 2 trades, 3 trades, 4 trades, whatever is comfortable for you, your tilt threshold, if you will, if you just respect that, and you're not over leveraged, you're literally guaranteeing the fact that you can't go on tilt and blow an account in one day. Like, think about that. If you don't over leverage and only trade 1 to 2 times a day, how are you going to even hit the daily max drawdown in a day? You're never going to do it. Right? Now, will there be, again, streaks where we're executing our setups and we're just 3, 4 losing trades in a row? Yeah, of course. That's why you don't over leverage, because you're understanding the long game, stacking base hits, the compound effect. All right? But if you have, 2, 3 max trade rule, or a rule where you have 1 win and you don't put on leverage, you don't put risk on the table, you don't put on your margin for error, your human ability, your human imperfection, if you will, that we all have, you are literally locking in that green day, you're building confidence, you're following some sort of rules, and you're feeling good about yourself. And it might seem silly, but you're putting yourself in a better state of mind for the next session. And you trust yourself, whether you realize it or not, you trust yourself more to not go on tilt. You're not coming into the market and saying, oh, what if I take a loss? Like, how am I going to respond? It's 9:34 and I'm already down $500 because I'm over leveraged, and I was so close to passing this fund, and yada yada yada. Right? You can get rid of all that. And how do I know that? Because I've been there. I've made all the mistakes. I told myself I was done with stuff, and then I go back and do it. Right? But it gets to the point where I wasn't gonna make progress unless I said, okay, this needs to be fixed. I can't keep doing these things, right? I can watch 1,000 hours of ICT. People who enjoy the way that I try to teach and share things that make sense to me, they can watch all my videos 400 million times. But if they can't respond to a losing trade or a series of losing trades, you're literally not going to be able to progress psychologically and monetarily. Right? And if you just understand that, and that's your framework, like that's your superpower. My superpower as a trader isn't taking the right inversion. It's not, how do you see the reclaimed BISI and use it in a way that makes sense to you? Or, the midnight fair value gap, now do we use it for every single trade? I'm overwhelmed. I feel like there's too much going on. My superpower is being patient, not caring if price runs without me, requiring a specific system and entry criteria to come to me from the market in order for me to put on risk. And if and when I take a loss or a series of losing trades, I don't freak out anymore. I used to, but now I don't. Right? And that's what keeps people from being profitable and consistent. And again, what I believe is the most important thing, confident. Before you even open the charts, you know what you're looking for. Like, I can close my eyes when I wake up when I get out of bed in the morning and say, okay, this is how I would describe a high probability setup. Right? Then I can also close my eyes and say, okay, if I take a loss today, it could happen. I'm going to be so grateful that I didn't over leverage. Right? And for some of you guys who it's the want it now thing, especially now with everything online that's designed to make our brains literally rot and have an attention span of a 3-year-old, right? Trading, the market loves that stuff because everyone's going in and no one can sit with discomfort. No one can take a loss and wait 3 days for a good setup, right? I'm completely prepared to do that. Is it annoying? Of course. I want to take a trade every day. It's fun. Right? But if you have been over leveraging, or you're trading with minis, and you can't find consistency and you can't sit with a loss, literally just for 1 day, 1 trade at least, scale back to 1 or 2 micros, and even just 1 micro for 1 day. See how much clearer that you see the charts. You're not going to be rushing into a trade because what's the point? It's going to be a small win for that one particular setup, and you're used to trading with minis where if you're trading NASDAQ on a mini, every fluctuation in price is $50 $100, $200, down 200, whatever. It's more aggressive monetarily, right? Watching your ticker do that, and it's harder psychologically. But if you only trade with one micro, you're going to be like, damn, I wasn't in a rush because there was no need to. And I was actually focusing on price. And when I did find a good setup, I was so much more calm and able to hold it longer because I wasn't wondering, if this comes back against me, I'm going to feel like shit. It's going to be another one. I remember last time when I got in, it came back out and stopped me out. All that thinking is going to be way quieter. Okay? So reduce leverage, trade less. Right? Like even today, we're going over some good setups, but today is a perfect day to just not trade. That's the freedom and the beauty of trading. Right? You don't have to trade every day. Just because the market's open, you don't have to take macro power 3 setups. Who cares if I took a trade or if someone else took a trade and you're going to miss it, or you're going to miss the best trade of the day. The market's going to be open tomorrow. Right? So that's the abundance mindset. You don't have a scarcity mindset. You're not wondering, what if I miss the best setup? Because you trust that your model, our model, the way that we read price with all these tools, it's going to happen over and over and over again. Right? And think about how much further along you're going to be. Now I'm ranting. Think about how much further along you're going to be and how much sooner you're going to get to where you want by following your rules. Right? If you show up every day and you do the right things, and I'm referring to not over leveraging, revenge trading, etc. Right? You're going to get to your goals and where you want to be and feel like you genuinely made real progress in your trading way quicker than you were just trying to over leverage and trade 1 million times a day and just pass an account in one day just so you can have, and maybe you'll get lucky and get $5,000 payout. Right? It's not sustainable. Right? You need to perform well. That's what's holding some of you guys back from consistency. Right? But if you're doing the same things on a day-to-day basis, the right things on a day-to-day basis, you're going to just keep going up and going up and going up and going up. And all of a sudden, 3 months from now, 6 months from now, a year from now, 3 years from now, if you're serious about this, you're going to know you're not going to need me or anyone. You're going to know what you're looking for on a day-to-day basis. Right? And again, more importantly, you're going to trust yourself to execute on that. You're going to know that you're not going to over leverage if and when it's a loss. You're not going to freak out. You're a trader. You're not a gambler anymore. You're a trader. Right? That's trading. Okay. So let me get out of replay mode and stop yapping. I was kind of going crazy with the little intricacies within this fractal of price. So a little break to talk about some psychological stuff. But again, nothing is, you have some guys that are this psychological guy or just a technical guy that thinks psychology is corny or BS or whatever. It's a balance, right? In my opinion, again, I've used this analogy a lot. If I have a 70% win rate, that's great. But if on the 30% of the times that I lose, I'm just quadrupling my leverage to get it back, I'm not a successful trader. I'm break even or even in a loss. So it's a balance. Should we just stay up all night and trade Asia and London? It's probably going to be good for ahead of NFP. Okay. What time is it? 7:15. All right. Let's keep going. I have a nice flow state right now. So let's keep it going. And I enjoy this stuff, and I know I've said it already, but if I can just say one thing that helps someone, then I will be satisfied. It can be the most random thing. Right? Confidence. You're struggling with confidence every other week. Yeah, and it's natural, but just do the right thing. Don't over leverage. Don't freak out. Wait for a setup. Rinse and repeat. Journal. Why did this setup work? Why didn't it? Would you execute it again? Would you not execute it again? And I posted this on Twitter, so I won't spend time. Just check it out after. We'll try to find some other stuff. But 6:50 a.m. macro was just beautiful. High probability inversion here. BISI passing through it. Amazing balanced price range. 6:50 macro opening price was here somewhere. We went below. This was an SMT. Again, go on the Twitter and you'll see this. And then we expand. Takeaway again. We have a prominent wick here and a premium from this low to this high. Man, I love this new drawing tool on TradingView. It's sick. And then some little trend line liquidity here, just adding to confluence. But more so what? The new day opening gap as a draw. Right? Didn't see this till now. So note again. See, this is cool. This stuff is so fascinating. This SIBI 441 formed, added confluence to this as a rejection. This is being worked during a macro. This here is like the 450 to 510 macro window. So this is a great example of the model that kind of variation of it, the one I drew right at the start of tonight's call, where we go up to this midnight fair value gap during a macro window, reject off of it. Admittedly, I would like to see this. Give me 1 second, actually. All right, see, this got me thinking. Matt, are you still in here? Matt, whenever I talk about HFibs, I think of you because I think we spoke about that in a stream together or something way back in the day. But here, right? So this is what I'm wondering. And again, this is just from fascination. I'm not going to start trading this way, whatever. Sometimes I will include it like this. But this one's a little funkier. So this is a BISI, right? So on this candle's close, it looks like we go up to the midnight fair value gap, respected on a close above 450 macro opening price right here. Okay. So it's checking out for a short and then, tack sell side down to a new day opening gap here. Even that, probably random. So it looks like we close below here, close back above, which isn't ideal, of course, and then we close below. But what I'm wondering is, look at this little differentiation from, so if this is our 3 candlesticks for our fair value gap formation, 1, 2, 3, and those disappear, figures. This little differentiation in price, this close to the open. You guys know, and you hear me say, like, if we have volume imbalance, I'll include it in the fair value gap anchoring. So for the SIBI, this is a liquidity void, but like here, this is what I'm talking about. This volume imbalance at the high to this SIBI, instead of just anchoring it right there, I'll include that right there. Reclaim SIBI, beautiful. Where this isn't technically a volume imbalance, but it is a gap, a differentiation in price. So again, this is just from a fascination standpoint where here we don't close below it. And when we do close below it, then we see the move. Right? So something to look into, me personally too. I'm kind of just observing it on my own over here. It's hard to back test really something like this with that, but ICT, he hasn't spoken about that, but I've just noticed that in the chart. So like here as well, like this would be a scenario where, wow, this is actually a great example where this SIBI, we want to see the bodies respected, right? If we're looking for lower prices, we close above, but this here, it's a weird little gap. And obviously, if we were to include that, price is not closing above it. Right? It's an interesting thing. And this just comes from, and I think a lot of you guys as well on your own, and have seen me spend so much time in the 1 minute where, regardless of what time frame you're using, I guess, you start to pick up on these little things. There's probably some other things I'm not remembering right now, but just something to note there. I won't spend time on this. This was a good 350 long here with this high probability inversion, which is really looking like a nice balanced price range here. Right there. $350 to 410 macro window. Right here at 405, we close above the midnight fair value gap. That's when you go to even. Again, though, this would have been a tough break even with these highs. Probably stopped in profit after a close above this, similar to what we discussed. Or close back below this. Similar to what we discussed earlier on. What, Matt? The lows not getting taken? That low? Yeah. I'm confused. I'm not going to lie. Oh, the body not closing below the wick that ran, the wicks, I guess. Oh, it's just holding, yeah. Like price not reaching down there, yeah. Gotcha. New day opening gap during macro 2:50 a.m. Obviously, we saw this expansion. Objectively, completely honest, this would have been break even for me. If I was to go, 250 macro opening prices all the way up here. We have those highs, midnight fair value gap. These clean highs externally up here. If I was to enter on this macro BPR off the new day opening gap, this is exactly the 1-2 punch I've been looking for. This would have been a partial for me right here. And then I would have wanted to see it close above this and expand. And then this is like those scenarios where I'm fine with I'd rather prioritize risk and I'd be okay. Obviously, I'm not happy. I would get break even and stopped out in certain scenarios like this. Just in case we were to go lower, taking a partial and tightening up risk there. But like in these cases, this is when it's frustrating as a trader, but you can't let it affect your next trade or series of trade or let you chase or anything. All right. I think that'll do it. I'll be on tomorrow at 9:30. We'll see what NFP gets. On that note, again, tomorrow, is not a day to keep it family friendly, mess around and find out. As always, we want to prioritize risk. We'll see what we get. See if they finally run the damn highs on, this is NASDAQ. What's that level? 22,110. Oh, I'm getting tired. But yeah, I had fun tonight. I hope you guys didn't mind my rambling about psychology and technical, just I guess about trading. So we'll see what we get tomorrow. And yeah, I'll render this recording out. How long has it been? It's been an hour and 10 minutes. Felt like 5 minutes to me. All right, so be safe. Get some rest, guys. I know trading's fun. It's addicting, but recharging off of the charts is important. Come back fresh tomorrow. Let's finish the week strong. See you guys.